Warren Buffett is currently sitting on 325 billion in cash, the largest reserves that he has ever had in his company history. Now, that means that something interesting is likely about to happen. So let's get into that a little bit. What happened recently? So Warren Buffett is selling billions worth of stocks as it appears he's positioning for an incoming recession. This year, this year alone, he sold 100 billion worth of Apple stocks, 10 billion worth of BAC, and created the largest cash balance in company history with 325 billion. Largest recession ever incoming, and I might agree. However, we'll get into that further in this video. But long story short, Warren Buffett is preparing most likely for a crash, and there might be multiple reasons for that. However, Michael Burry, for example, is already sitting for a while as well on cash. The biggest portion of his portfolio is currently cash as well, which means that this person, Michael Burry, a very well-known investor, by the way. If you don't know Michael Burry, make sure to do fucking research about it, because he's very known. It will speak for itself when you Google his name. Anyway, he's currently sitting in cash as well, meaning that he sees something coming that we are currently not seeing. Now, I made a newsletter as well about this. It will be released on the 6th of November. So by the time you see this video, we are now the 4th, I guess. Yeah, we're now the 4th of this video. 4th of November. So this video will be released somewhere as well around the 6th of November or maybe a little bit later. Anyway, here as well where I explained what happened in short is that Berkshire sold 100 billion in Apple shares and 69 billion in Bank of America shares, leaving people thinking that there might be a recession coming. Now, here's the thing. People are already screaming for a recession since 2017, and the only major crash that we had so far was COVID. That's about it. And even COVID was not that big of a crash if you compare it in the overall perspective. It was not that big of a crash and not that big of a deal. So that means that something a lot bigger is coming our way sooner or late. And also, he halted the company buybacks of its own shares. This is the first time since 2018. Now, what are my thoughts on there? I've been reading a lot about Warren Buffett in the past few weeks, so I've learned a few things about his perspective. And again, long story short, he's sitting on a lot of cash, sold a lot of stocks. Warren doesn't see any bargains. That's basically the problem. And for me, it's the word bargains, which basically means that a lot of companies are overpriced in Warren Buffett's perspective. And honestly, I could say the same because, in my opinion, respectfully, but Apple is not worth 3.5 trillion. Nvidia is not worth 23 trillion. Microsoft is not worth 3.11 trillion, and so on and so on. A lot of these companies are starting to be overextended in price, overpriced in general, and I think that's what Warren is preparing for. Here, in all perspective, but I also do think that Apple is not worth 3.55 trillion, and for the rest, for everything on this list, basically. Now, in the past few weeks, like I said, I've been reading some books of Warren Buffett. For the people who want to know the books, The Interpretation of Financial Statements and the Intelligent Investor's Mistakes. Now, in this book, he basically explains the following. Where is it? Here? And I quote, "There are times that it is advantageous to sell one of these wonderful businesses. The first is when you need to make money. When you need to make an investment. When you need money to make an investment, my apologies, in an even better company at a better price, which occasionally happens. The second is when the company looks like it's going to its durable competitive advantage. The third is during bull market, when the stock market in an insane buying frenzy sends prices on these fantastic businesses through the ceiling." And I think this is what Warren Buffett is currently looking at. A lot of these companies just keep on making new all-time highs, in a short way of saying it. So meaning that is, as they keep on making all-time highs, new all-time highs, prices logically get overvalued. The same with Bitcoin. If Bitcoin, or back in the last bull market, when Bitcoin hit its all-time high, it was overpriced as well, and eventually price started to plummet. The same will happen eventually with the stocks, but that will also take crypto with it. So if a recession comes eventually, it will take crypto and everything else with it. It will be horrible. So again, for the people who want to read these books, make sure to do it. They are very, very interesting, and it gives a quite a good perspective as well on what Warren sees in the market. So it's not rocket science, I would say. It's quite easy. He has a few core principles, and I'm recognizing that now as I look at the stock market, as I look at what he's doing. I understand now with the things that he says in his book. Now, another major thing that is interesting to talk about is the national debt of the US. However, before I get into that, I want to talk about an interesting theory and the periods of making money. So, before we get into the national debt of the US, we should talk about this picture right here. Periods when to make money. And this is a picture that I found back in, I think, a little bit after COVID. I think it's somewhere 2020, 2021, I found this picture. And ever since, I've been paying a lot of attention to this picture. Now, what do these years mean? The upper part means A, years in which panics have occurred and will occur again. We'll get later into that. B, years of good times, high prices, and time to sell stocks and values of all kinds. C, years of hard times, low prices, and good time to buy stocks, corner lots, goods, etc. And hold till the boom reaches the years of good times, then unload. Sure thing, save this card and watch it closely. Now, the interesting part about this picture is that it's something of a 152 years old. This picture is very, very, very old, guys. Sorry, actually, as I'm seeing this on Reddit, this is 135 years old with a 90% hit strategy, which is true as I did research on it. Now, let's quickly talk about these years because eventually they are quite accurate, if I would say. So if you pay attention to it, you will see how accurate this picture might actually be. So in 1783, we have the American crisis. Then we have on the picture the 1803, international turmoil. Then a whole list of panics. 1819, panic of, this is a typo, the panic of 1819. 1837, the panic of 1837, major depression in the US. 1857, the panic of 1857, first worldwide crisis. First worldwide crisis in 1857. In 1873, we have the panic of 1873, economic depression in Europe and North America. So 20 years roughly later. And then in 1891, the panic of 1891, economic depression in the US. Then in 1911, we had a minor depression in the US. 1927, I think we all know what happened. There was the start of the Great Depressions for most countries in the world. Then in 1945, we had the beautiful World War II, where a certain man tried to stop certain people from achieving certain things. Then we had 1965, international turmoil, 1965. Then we had in the 1981, in the early 80s, recession. Then in 1999, the dot-com bubble. Then we had the COVID scam in 2019. And the next major crucial events or panics should be planned for the 2035 region and 2053 region. Now, in general, this kind of aligns with my perspective. But what's more interesting about this is that every 15 to 12 years, we have major world events that tend to be harmful. Next one estimated to be around 35, which aligns kind of with my perspective of reading certain books and understanding how the world order is changing. However, in another video, I will talk more about that. The good time to sell stocks and other assets occur every 8 to 10 years, which also makes sense with what happened in the past and seems roughly timed with a year margin roughly. Next one to be estimated in 2026. Think about when you would sell your stocks, your crypto. If you look at that chart, it's not always as correct and the dips are not always as big. However, it is very accurate. Again, 90% hit rate or 85% hit rate, which is quite crazy for a picture that is, or an image, a file, a document that is 135 years old. Make sure to do research about that picture. Just type in on YouTube periods of making money and it will explain itself who made it, how long it is already out there, and so on and so on. You will learn a lot about it. Anyway, let's continue. The opportunity phase happens every 7 to 11 years. Next one estimated to be 2032, which if we think about it, again, with crypto changing in the next years, better regulations, ETFs, AUMs taking control, and people actually expecting a major recession, it could make sense that 2032 only could be back, or 2030 regions could be a good year again to buy short-term assets and sell them again around 2034 in preparation for a potential financial disaster in 2035. Why? If we look at the picture, guys, we are now we passed 2023, and 2023 was a good year to buy stocks, corner lots, goods, etc., and hold till the boom. So if we think about it in crypto perspective, 2023 to buy Bitcoin was quite ideal. 2023 to buy gold was quite ideal. The stock market was quite ideal. If we look now back at those prices, everything exploded. Bitcoin exploded from $15,000 to where we are right now at, I think, $68,000, $69,000 at this moment of making the video. The stock market basically exploded, made new all-time highs. Gold made new all-time highs. And if we look at this period here at B again is the years of good times, high prices, and time to sell stocks and values of any kind. It's estimated for 2026. Now, I personally think that we will see a top of the bull market somewhere in 2025, estimated the winter of 2025. But overall, if we then get a crash here and prices start to head down lower again, I will be more than happy with that because the world will be changing a lot. So it kind of makes sense. Now, again, with the regulations and all in play, crypto might be in a longer term bear market, more accumulatable for the AUMs, who knows? So it could take a while before crypto fully recovers and restarts a new bull cycle. But once it does, it could be around the periods of 2030, 2032, which I don't think will happen, but if it happens to repeat the 4-year cycle, this kind of makes sense. 2026, when the bear market roughly will be for Bitcoin, a year to the downside. 2027, 2028 could be then a bear market bottom again, if it repeats the 4-year cycle, and then 4 years added to that indeed comes out to 2030, 2031, 2032. So it kind of makes sense. However, then we have a quick spike to the upside 2 years later to again be advised that we should sell our assets, because the next year following, in 2035, we should face a major panic. Basically, God knows what will happen. It could be another COVID. It could be more control from the government. It could be everything, guys. Nowadays, I will not be surprised anymore by nothing that the government is doing or trying to implement on us. So a lot could be happening by the time that this happens. Estimated at 2030, 2035, panics could occur, and that it's a good time again to sell. Now, a thing that you have to know is that there's always an opportunity in panics, and there's always an opportunity when the panic is done. Because psychologically seen, most people will only panic here when everything is at a low of a low. When everything is in panic mode, people analyze and see what is happening. And they will go down with a downwards spiral that this panic will bring. Same like with COVID. People just anticipated, started to stay home, listen to the government, and boom, 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 boom. And once prices like 2022, 2023 were extremely low, then people only started to panic. We don't have money, this, and that. The same might happen in this next cycle being. So that's something to be fully aware of, because here is where a lot of opportunities will be in that period estimated. And if you go against the psychology of the market and most people panic, you should buy. When most people will be greedy, you should sell. It's very simple. Now, let's talk a bit about the national debt of the US, because guess what, motherfuckers? The US is 35.75 trillion in debt, which is again an all-time high that they have in their debt, which is just crazy. This is just one big monopoly at this point. So let's read. Rising US debt can be a serious problem for the economy and the value of the dollar. When the government borrows a lot, it has to spend more on interest payments. This can lead to higher taxes and cuts in important services. If investors start to worry that the US can't manage its debt, they might lose confidence in the dollar, which could cause its value to drop. And again, guys, the US dollar already lost 99% of its purchasing power in the past decade, I guess. So the dollar is basically worth nothing, and they're trying to do everything to save it. Will it work? We'll find out. Now, here we can just clearly see big debt, guys. It's the money printer goes brrr. It's basically as simple as that. These people are crazy. It's the easiest way to say that is that the people are crazy what they are doing, and they are not realizing that they are actually hurting. I mean, I think they actually do realize that they are playing with fire, to say it like that. I think they do realize, but yeah, they keep on doing it. Now, here's the thing with history. Empires fall. Look at the Portuguese Empire, the Roman Empire, all the empires before, and all the fiat currencies before have failed. It took them around an estimation of 200 years to fail. So the US dollar will. The US dollar eventually will fail as well and will become part of history. Now, when recession, we have no idea, but if we look at this picture, where is it? Here. When recession, we could expect one at 2035 and a bear market in 2026. Let's see if that will happen. We have no idea. Now, another interesting thing that I want to share with you guys is Peter Lynch, his perspective. Peter Lynch is one of my favorite investors, I would say. I have a few books of Peter Lynch as well. It's a very good investor, somebody with a good perspective, a very easy approach as well to the stock market, which I really like. It's very easy explained, so make sure to do your research about Peter Lynch. Funny guy as well. But one thing that's interesting, which again goes in alignment with what we have here and here. Here and here. According to Peter Lynch, again, one of my favorite investors, the stock market has experienced 50 declines over the past 93 years, averaging a correction of 10 to 15% about every 2 to 3 years. Amongst these declines, 15 have been significant with drops of 25% or more. This means that on an average, a bear market occurs roughly every 6 to 8 years, providing excellent opportunities to investors to buy into market at low prices. And if you compare this number, it aligns with this number here and this number here, because here it's time to sell and here it's time to buy, estimated every 7 to 11 years, here estimated every 8 to 10 years, which completely makes sense with what Peter Lynch is saying. So even backing up this picture, this image that's already super old, backing it up even more. Guys, I know this might be boring, but if you're not paying attention, you're really letting go of interesting value, interesting information that perhaps over time, if you prepare yourself for what's to come, because that's the key, preparing yourself for what's to come, even though you don't know what's coming, you have to prepare yourself for something. You have to set yourself safe. This video can help you making better decisions, understanding when to anticipate on certain things, when to become more aware. Again, this is not an indicator either. This is not a follow blindly, completely not. An own understanding is important. You have to understand what's happening to the stocks, what's happening to companies, what's happening to the market in general. You have to understand what's happening with the economy. But overall, guys, you just have to understand that this picture, this image might actually really be helpful. Now, here, let's quickly take a look at the US debt clock live. Making this video with the former picture that I said here, it was 35.75 trillion. Now we are at 35.97 trillion, so almost 36 trillion dollar in US national debt, guys, which is just crazy. Now, if you look a little bit further to unfunded debt and interest, the total what here is, what is this, 102 trillion dollars, 102 trillion and a half dollars in debt, which is just, I'm speechless. Credit card debt, 1 trillion. Student loan debt, 1.7 trillion. Guys, this is a ticking time bomb, as we say it. This is just a ticking fucking time bomb, and they will not be able to keep this up forever. However, an interesting thing is that we'll get later into the technical analysis, is a thing that you have to keep in mind is that we might actually continue for the next coming year or two by going up. Buffett is anticipating on a recession, but he has still around 100 billion or more in stocks. He still holds stocks. Michael Burry as well, they still hold stocks. It's not because they are selling right now that a recession will occur immediately. They are preparing themselves because, again, when I talk about Warren Buffett reading his books, the man is out for bargains and numbers have to make sense. If they do not make sense or there's no bargain, he will get out of the market and will wait for a bear market. He likes to sit aside with cash, waiting for opportunities. You can read it in his books. Anyway, why the bubble might continue. Confidence fuels spending. The economy relies on spending money because that's basically where most of the capital comes from. And people tend to spend more when they feel financially secure. Rising stock prices and property values make people feel wealthier, which leads to them spending more, which again is true, but think about market psychology. If the stock market were to drop significantly, that sense of security would weaken, leading to less spending and slower economic growth, which is true. However, as we saw with COVID, it is very fucking possible. Second, debt and low interest rates. The government has borrowed a huge amount of money and a big chunk of spending now goes just to pay the interest on this debt. To make those payments manageable, interest rates need to stay low. Low rates also mean people can borrow money cheaply, which encourages more investment in stock and real estate, pushing their prices even higher. Again, this is just trying to hold on to something. It's basically saying this is just trying to push things to a limit. And the higher things go, the harder the fall will be, the harder the recession will be, the more people will be victim, the more people will lose all their money, assets, everything. It will be crazy. Once it comes, it will be fucking crazy. We can have a bear market that can be heavily, but once a panic or again a big recession, estimated 2035-ish, occurs, things will just get out of hand. Bear markets can destroy people, but recessions kill people. Basically, they kill people. Now, inflation as a strategy. Inflation can actually help make debt easier to manage because it reduces the real value of what the government owes, which is true. Higher inflation can push up asset prices, which further supports the market. So while inflation isn't great for consumers, it keeps the debt under control, which is true, and the market steady, which is basically what they are doing right now. They are doing that right now, and they will for sure, no matter who wins, Kamala or Trump, doesn't matter. The approach might be a little bit different. Trump might use, or says that he might use Bitcoin. Kamala is completely against it, but whoever wins, they will try to keep this going, some way, shape, or form. Support from the government and the Fed. If the market drops a lot, like 20 to 40%, the government and Federal Reserve usually step in with measures to stabilize things, like printing money, which again will just lead to bad things, or lowering interest rates even more. This makes it more likely that they will keep the bubble going to prevent a crash that could disrupt the economy, but again, it's just a ticking time bomb. Then 5, the rise of the high market. Although the approach has helped the economy stay stable, it creates risk. The high stock prices we see today mean markets can be more volatile and returns in the long run could be lower, which is an important one for investors like Warren Buffett, guys. Long term, the profits have to be good, the returns have to be high, not lower. But as long as the government and the Fed continues to use these tools to prop up the market, it's likely that the bubble will keep growing. Again, this is true. This is all based off my own research. This is my newsletter, by the way, for people who did not realize yet. It's my newsletter. So, conclusion: the higher this goes, the bigger the fall of the U.S. empire and the U.S. dollar will be. And in my opinion, guys, the U.S. is losing its power against BRIC in the next coming years to be. Then here I talked about this powerful image, but we already talked about it. Then quickly let's discuss this right here. If we look at the Dow Jones, guys, it looks very interesting because when we look here, we see that we trade a little bit on lower time frames. It's even more visible. Let's go to the monthly, for example. On the monthly, we can see, for example, here that we trade slightly above this for a little while. Then eventually we crash to the downside, making the Great Depression. Now, what we are doing right here is we hit this trend line here. Actually, should place a little bit lower. Exactly. We had this trend line here. We had a crash. Crash, upside, 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 upside. We had this low COVID thing hitting a trend line, forming a beautiful trend line support, heading higher. And what we are doing right now, guys, is that we are trading above this trend line once again. The last time that happens was in 1929 with the Great Depression. So, based on a historical fact, not knowing if this will happen or not immediately at least, we could anticipate that based on history, once price touches the trend line resistance or trades above it, it has a major crash. Here we traded above it, major crash. Here we touched it, big bear market. Then here the real estate crash, I think this was of 2007, 2008, 2009, whatever. As well, very, very big. Yeah, this we can call actually a crash because it went even deeper than this one. And then the last one we had was on COVID. So, in technical perspective, guys, we could, yes, start a decline in the stock market sooner or late. Eventually, we will lose support here. And if we lose support here on this trend line support, it could be a massive crash that could go on for a little while, retesting these lows here probably once again. But let's see, guys, this is all speculation. This is all anticipation. We do not know. I do not know. Nobody fucking knows what will happen. The only thing that we can do is prepare ourselves with enough information and taking action on time to prevent ourselves from being hurt from an economical disaster. All right, guys, towards later I'll make more videos about this, about more information about recession, crashes, etc., etc. Will be sure, or excuse me, I'll be sure that you'll be kept up to date about what will happen in the market. All right, guys, see you in the next video.